most traders don't lose money because they can't recognize setups. They lose money because they can't recognize the difference between an average setup and an exceptional one. That's why I'm going to show you what a true grade A setup looks like by dissecting one of the 4 classic continuation patterns from start to finish. You'll see every bit of technical analysis that went into this trade, and if you hang on until the very end, I'm going to share with you a hidden clue that you can use the next time you break down a chart. So Devin's got a breakout of a wedge. All right. So let's go through some IPDE real quick. I'll tell you, I'll take you through how I would handle it, and then different alternative ways to handle it that aren't from me. So identify, predict, decide, execute. Right? We can see that price action recently broke and closed above a previous level of structure. Now, I use the horizontal structure because I'm just not a trend line person, but the trend line, we can use that as a break as well. We also broke this previous level of structure, right? So when we identify what price has done here, what would we say? Price action broke and closed above a previous level of structure. We violated a previous level of structure, whatever terminology you want to use. We then, and again, this horizontal structure in blue or the trend line structure in black here. But for me, the horizontal one's going to be more important. So we have that prediction or that identification that allows us to make a prediction that price is likely to go in what direction? To the buy side or to the sell side? What would you guys say? Yep. Price is likely to go to the buy side, right? Very easy answer because we're rules-based traders. And when you have a consistent plan of rules, it makes life so much easier, right? Doesn't this make life so much easier, right? How many of you guys in the past have debated like, oh my gosh, are we bullish? Are we bearish? I don't know. And brain explodes. Now it's like simple principle. You're like, okay, well, we broke and closed above, so higher. It makes it so much easier. Now we can use our brain energy on other things. All right. So what's the next step of our predictive process? First part of prediction is what direction is price likely to go to? Next part is, nope, not finding reasons for enter, not yet. Where is price likely to go to next? So if we're likely to go higher, you like that? Yeah, that was good. Where are we likely to go to next? And what should I do to determine this answer? Look left. Structure leaves clues. Let me look left. Find our next level of structure. All right, here it goes. And let's take a look at this and say, okay, here's our next level of structure. This is the area in which I think we're likely to go to next. So now the question is there enough opportunity? And this is going to be one that only you can answer. Is there enough opportunity for me to trade from here to there, right? And you can see we're currently trading right now at 188.04 up to about, what is this? 188.78 or even 189 even. There's about 100 pips. Is 100 pips enough room for you to trade? If there is not, then you're like, next pair. If there is, then we further investigate. All right, so we have identified what price did. We have predicted a future direction. We have predicted a future location. Now we go to, was it Muhammad? Now we go to Muhammad. Now we go to your statement. Let's find a reason for entry. All right. So you guys okay with dropping down to a lower time frame? Let's go down to a 4-hour. And again, this should all be within your rules. And again, there's a few ways to trade this. If you are a breakout trader, then you could have traded the breakout right here, either the break of the trend line, which would have to be drawn on better, either the break of the trend line or the break or the close of the candle after the break. So this is where a breakout trader, I'm going to call it BO, not body odor. This is where a breakout trader could get involved if they're looking for the close of the slanted trend line. This is where a breakout trader would get involved if they're looking for the close of the horizontal trend line. Now, as a breakout trader, you're most likely, and I'm not a breakout trader, but if you're a breakout trader, you're most likely much more aggressive with your stop losses, right? So if I were a breakout trader, my stop loss would be below this candle. Does that make sense? If I was to break the upper one, would be below the breakout candle. I got a lot drawn on here because my mindset of a breakout trader is this, kind of like real estate, right? If it's a house that a lot of people are interested in and it's at a good price, does it stay on the market for a long time? Hell no. So if you're a breakout trader, you're doing like that. What is another option, right? We know there's 3 ways to trade. There's breakout, there is reversal. We're not really reversal traders because this is a continuation opportunity. So what is the only remaining way to trade? Pullback, right? So now you're waiting for the pullback. Now you got a few levels you can look for. The start of the zone, and again, if you're using the horizontal support and resistance, the start of your pullback zone starts here at this blue line. I would say that it's relevant until or unless we violate this level. So anywhere in here is where you can look for your pullback trade to enter. So now the next question, ooh, is this a butterfly as well? Anyway, now the next question is, what do you need to enter? And this is where it's going to be specific to your rules, right? If price pulls back, then I need RSI to go oversold, hidden divergence, double bottom. I know Devin, you used the ADX. Do I need the ADX to show me something? Right? We did some work with the MACD yesterday, right? Do I have a MACD on? Right? Whatever your specific reasons for entry are, or let me put it this way, whatever your specific requirements and then your reasons for entry are, that's what you're waiting for. But the idea is that you're waiting for a pullback, a little bit of relief, and then you're looking to catch the next extension higher up to that level. Now, we drew out a zone here, right? This is the zone based on the top level of that structure. How about we maybe get more specific? Let's take a Fibonacci extension from our swing low to swing high, since we started giving some relief already, and see if there's a Fibonacci level in there we can use to get a specific price point. We got one at 188.84. The general premise, Devin, is okay. Well, if you're a breakout trader, you're already in. If you're a pullback trader, now you're waiting for pullback. You're waiting for reason for entry in this zone, and you're looking to trade it up. And again, based on your style, if you're a true trend trader, you're looking for the extension all the way up to this zone. If you're more conservative, maybe you're just looking at a retest of the highs. Again, a lot of that is going to be up to your personal decision making. But that is how I would handle this trading opportunity. It's a pretty good one too. All right, Devin says, would you consider putting the stop loss at the bottom of the green zone of the breakout? Yeah, I think below this, your safest stop loss is going to be below this level. If you are shooting for a continuation trade, I think that's the best place to put it. Can you be more aggressive and put it behind your specific entry reason? Yeah, right. You could certainly do that. If you can put it below if you get a double bottom, you can put it right below a double bottom. But yeah, if you're taking like a 3-bar reversal or like a higher high, higher close, I would certainly want to have it below this zone. Again, this is the zone that most likely tells me that I'm wrong. So that's where I want my stop loss at. For me, a stop loss, I don't want to say would be pointless, right? But for me to have a stop loss right here wouldn't do much justice unless I plan on entering multiple times, meaning unless I'm a trader that says, hey, I'm going to be aggressive with an entry. If I get stopped out, I'm going to enter right again. Then it makes sense. But if you're just shooting for kind of, hey, I want a single trading opportunity in this zone, then I'm going to put it there. Now, it also will determine or depend on, your risk profile. So if we get a deep retracement down here, pretty easy answer to say, hey, okay, I'm trading here. Stops go below there. Targets go here. Bada boom, bada bing. I'm in business. 2.5 to 1, right? But this kill zone's big, right? What if your signal comes right here? If your signal comes right there, are we still in position to put a stop loss down here? Probably not going to work out. So in a situation like that, you have two options. One option, okay, can't take the trade. Stop loss doesn't work, can't take the trade. A second option would be to do an aggressive stop below whatever your reason for entry is. And then again, I call it a true trend traders, because typically true trend traders take multiple swings. Say, hey, if I get stopped out and if I get another reason for entry, I'll just enter again, because the trading idea is still valid. It just didn't work out for you in the first area. So you can do that. Or again, you can say, going back to the first one, if you know that your stop is going to be down here somewhere, you know that your target's going to be down here or up here, excuse me, you can bring out and if you know your risk reward is 1-to-1, you can bring out your Fibonacci retracement tool and say, hey, I know that the highest I can enter is up here. So I can't even look for any signal that comes above this zone. I can only look for signals that come within this zone. So plenty of different ways to play it. This is a legit trade. It's really good. What I would look for is, again, as price action comes down, I don't want to anticipate, but I would guess if we retrace down to 87.5, right? 187.5, that RSI is probably going to go down here. That's going to give us hidden divergence as well, which is another clue, right? Hidden divergence being a clue of trend continuation. Again, look at this example right here, real quick. Look at this pullback here, and look at this pullback here, right? Would you guys agree this is higher highs or higher lows, excuse me, right? Look at our RSI. Hidden divergence. So hidden divergence is something that's beneficial to a trend continuation trader, right? We even saw it on the previous one, right? You want to keep going. Look at this one. Higher lows right here. Once again, look at our RSI. Look at that. Another one, right? So again, these are positive signs. So again, we never know what's going to happen, but just looking at the RSI right now and how far it's dipped with just this minimal movement, it wouldn't shock me if we did see some hidden divergence down here as well, which would just be, it's not needed, it's not necessary, but it's an added sprinkle on top of this trading cupcake. So yeah, I really like this opportunity. I would have this as a grade A opportunity. If you want to see what my favorite entry technique is and learn more about that hidden divergence thing I talked about, make sure you watch this video next.